welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Back. All right, looks like we're up and running. Chris, of course, doing such an awesome job driving the bus here day in, day out, week in, week out. Hello, Preston. How's it going, Brian? I don't know. Got to move here in a couple weeks. I am really excited. Once the move actually happens, I should actually have a pretty sweet setup. And hopefully, actually, I can do videos with a nice background image for you guys, sunsetting and stuff like that. Having said that, but to get me from where I am now to there, this is going to be a challenging couple of weeks for the old man. So I'm a little stressed over that, but we'll see how it goes. I suppose in this crazy country right now, the hyperinflation, literally the cost to move is like literally gone up. Last time I moved was 3 years ago, and the price that I was quoted was basically 50% higher. So yeah, maybe even higher than that. So it just goes to show the inflation is biting all over the place. Anyway, is what it is. I suppose that's half the reason why we got involved in Bitcoin to begin with, way back when, was to try and hedge ourselves from this insanity. So we'll say from right from the get-go. I think I did a half decent job of JoJo's request for me to try and help out the public. Try and make a positive difference in this world. Not driving Lambos, although I suppose I could like go and buy a Lambo and drive it around, but that'd be kind of a waste of money. I'm the type of guy where I remember there was one gentleman in Switzerland, David, I think his name was, who used to watch these videos basically a decade ago, and he used to dream about, oh, I can't wait to buy this car when I get all rich and stuff. And I remember, walking by the, I don't know, some fancy car dealership when I was there, I think in 2018 or so. Went and visited him, stayed with him for a while. And then the irony of it all is, of course, he learns how to trade with me, and he goes through a full cycle. Then he gets to the next cycle, and he rode the ADA wave, that particular cycle, up into the peak. And of course, sitting on just a mountain of money. And then I'm like, all right, so you're going to go Lambo shopping? And he's like, you know what? I think I'd prefer just keep the money in my bank account. Thank you very much. It turns out that they're horribly depreciating assets. And that's what almost always happens. So I'm having a hard time justifying actually pulling down cash and going and buying a house. Screw these stupid Lambos. So anyway, hopefully through my tutelage and my guidance, we can get you heading in that kind of direction. It does take time, though. There's no doubt about it. And unfortunately, when you come in sort of halfway through a cycle, and I might even say we're about, I don't know, maybe 2/3 of the way, 3/4 of the way through this cycle now. A good portion of it is behind us. I did find it interesting, and I'm not quite sure why. But I was just sitting. I'm not quite sure if I even have it on here. I was sitting on my own private Google account, right? I don't use TRI to watch YouTube videos and stuff. And I saw a note go by of we used to do those shorts, and literally perfectly called it. Remember when we used to have do you get your shit together kind of stuff? And I'm going to try and refrain from swearing too much, but that was the shtick. And I even remember when we went through that, we were all like to try and be politically correct, somebody was like, well, why don't you say skirt? Do you get your skirt together? But is what I find fascinating, and I don't quite understand what the end game of Spirit was here. I mean, maybe my job's done. But I did find it kind of interesting that I went back and have you been following me forever? Well, then you know this. We were barking out there when you were supposed to get your shit together. And what I find fascinating about this is, like that 2 comments, 33 likes. I don't even doesn't even show how many times this was viewed. But this was absolutely the perfect market message there, you know. So I did find it interesting how this popped up on my feed there, reminding me. I would have thought though that if I was doing Spirit's job and getting the message out, hell, this was before I even threw on the old facial rug. But God, I would have thought that the message would have gotten a little bit more traction. So I'm a little disappointed in how all this has gone, to be honest with you. I'm wondering whether maybe this experiment is coming to a close. Anyway, so a bunch of things going through my head, especially through this coming crypto cycle. I can definitely tell the difference in crypto now. I can definitely feel, I mean, this place has been securitized. And it just doesn't feel the same as previous cycles. The way that Alan completely bastardized that Doge story. I mean, Doge was so fun. I don't know whether I can. It's how ironic it's on Alan's fucking platform here. Excuse my French. Swore again. But I don't even know if I even have it. But I mean, I remember like 10 years ago doing the whole Doge thing, and interesting how Alex actually there. Look at that 2020. Haven't seen him in the crypto space in quite some time. A lot of these original people that I got interested in this space about, and a lot of them are just long gone. Don't even hear from any of them anymore. And also too, this gentleman, he just sort of fell off the face of the earth. Very disappointed. But I suppose that's the way life goes. What I wanted to show you was, and I actually think I even saw somebody making reference to the original founders of Doge, the guy who actually wrote the original code. I think it was him. Actually chiming in recently about what his poor little Doge has gotten to. I don't know why it has all this ore stuff on here. Oh man, it's so difficult to use this. I'm probably heading down. This is why you should prepare for these shows ahead of time, so you don't sit there and waste people's time. No, maybe I typed it in wrong. There we are. So anybody who knows me, I mean, this is when we used to have fun in Doge. And I would be willing to bet that most people that are involved in Doge right now have no idea who these people are. But this was when Doge was fun. Look at that. That was the last cycle. They're selling up top here. But let's see if I can show you. Like this is how long I've been in this space, and I've worked with Doge, and a million years before this Allen clown gotten involved. There's actually the original coder, the original dev of Doge. I was so proud of myself when I got to meet and hang out with him. So that's how long I've been in this space. And we were parading around downtown Vancouver looking like total doofuses. At least I was. Everybody else looked cool. I look like an idiot. But what the hell? We were having fun. Oh man, feels like a million years ago. And actually, I don't even think that was from December 2021. This was actually from like back in like 2017, 2018. So anyway, if you're ever wondering who and actually this is a perfectly good analogy of Alan, because Alan didn't actually create the electric cars. He basically borrowed the idea from somebody else. The company Tesla was actually owned and developed by another person, and they had to keep upping the ante because they wanted to buy the name for the company off of the guy. But it is a good example. I mean, I was in Doge years and years before Alan ever was. And we had a lot of fun. I mean, the videos. I don't know whether I put any videos out on this thing, but man, it was a lot of fun parading around downtown Vancouver with all the Doge kids a million years ago. Here we are. That's what this was. So when was that? June 2018. That was, if anything, I hate to say it, this was actually the peak of crypto. Um, Brian kissing the Doge ball. This is a lot. And I always wondered whatever happened to her. I never remember what her name is, but she was a character. Anyway, so there you go. That's the crypto that I sort of fell in love with a million years ago. I have no idea what the hell crypto is nowadays. It's turned into such a sad story of just greed and fluff. Sorry, people. I'm sure that's probably the last message you want to hear. But anyway, crypto did do its job, and I think that's a pretty important message. Um, if you just look at Bitcoin itself, um, I think the powers that be knew what was coming down the pike here. And the whole hyperinflation of the money supply to basically buy our way into the new world order. Add a zero onto the end of all your price tags and get used to being great resetted. So basically, this assets come from nothing all the way up to better part of 100 freaking grand right now. This has been a very interesting cycle, I will say that. But you can definitely feel the tone of this market is very, very different than years gone by. I'm not exactly sure how this story is going to play out. I mean, does anybody? I don't think so. I do like the idea that we move in these pretty predictable 4-year cycles, and this cycle trough, I guess peak should come sometime around the end of September, middle of October this year. That it just feels like that's appropriate. Also, too, and probably a little sort of heads up for you, if you ever follow the markets seasonally. And actually, I think our level 3ers we're going to be doing trading the markets seasonally this year. If you ever actually see the market sell off into the spring versus rallying into the spring, it probably suggests that we'll rally into the end of the year. And unfortunately, that doesn't really bode too well for the beginning of the new calendar year. So I do think that we had a base here that really blasted off October, November. And we're going through a very healthy correction. Ironically enough, even if we just come down to 61.8s top of value, good old Tom Lee's objective will still be higher year over year. I mean, you could technically make the argument any kind of dip into this area, and it's just a case of higher highs and higher lows defines a bull market. Do find it fascinating how in this particular correction, a lot of talk, and I'm actually a bit surprised at how much talk about, oh no, this is it's over. Not even in the comment that I put out on Twitter was kind of like, I'm a bit surprised that we skipped right from rip roaring bull to it's over, it's all going to zero. It's like, wow, what just happened there? And And actually, I put this tweet out yesterday. I think this is the tweet that we included in the newsletter here today. Nope. Well, oh yeah, that's what this one was. Right. And I just basically said, seeing a lot of technical confluence in and around Tom Lee's level that he basically said about, I don't know, 2 or 3 months ago that he figured the bottom of this pullback would be like 60, 70,000, and the subsequent peak next fall would be, 200, 250,000, somewhere in that area. I don't see any reason why any of that should change. And now what I'm seeing, like when we're sitting up top here, I have no idea where we're going. But when we start carving out these pretty well-defined M's, so up, breakdown, that in itself is a pretty powerful message from the market. We're going to start drawing our chaos theory levels off of that range. So that's that 1 there to that 0 there. Looks like that could actually even be a little bit higher. I think this was on my laptop. I think I have it over here. Bit surprised that that's not exactly crisp. But anyway, this number is probably a little bit lower. I'm not quite sure why that's off like that. Anyway, if anything, that probably helps the cause because I really do like a nice stab down into sort of 64,000, maybe we'll call it. That would actually line up perfectly with the original double bottom breakout level here. Probably also too, when we look left, you've got that key pivot low. So somebody stepped in and stopped the bear there and pushed it back up. And then this cute little double bottom down here. So there were some sellers that tried to step up there and somebody said, nope, we're going up. So I might argue that actually there's probably even a bunch of trap bears in these tails right here. That if price can stab down into those levels, especially that double bottom right in there, if it can stab down into these levels, whoever it is that is short from these levels is like, oh, thank God, get me the hell out of there. Back up we go. So we've got chaos and got a big fog and bomb right in that area, and 4.669, that's like the sexiest of all the fog and bomb levels. Reload zones, just off of this range alone here, 61.8 to 78.6. Of course, there's Brian's favorite fib, 62,000. As I had said, the original double bottom breakout level, I might argue that there's probably a bunch of open orders sitting at that level, 65,000, split that sort of that range in the middle. Seems logical. I don't think there's anything unrealistic about that. And now it looks like we have a B, C, D. So we had a kind of a bump and grind our way down. And the reason why I like drawing the ABCD off of these particular levels is because this actually was the 50% retracement, sort of like the initial technical target off of this setup here. Basically, 2.6 to 1, there's that 50% level. That is that stab. I know this is kind of a busy chart, kind of hard to see. So I do think that people that were playing this top up top here, I do think that this was their profit-taking window. Dead cat bounce right off of those lows. Anybody going short here, they want to punish them immensely. And ironically enough, all they did was they just brought this market, the price, right back to the original structural fail level here. And then back down we go. So I do kind of like that, sort of like that's a range. Then we had this huge sort of snapback. You can almost think of this as like some sort of zigzag pattern. And actually, if you do this symmetrical ABCD study, that's how this comes out. Anyway, something like that. Boom, 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 boom. I actually like that. That does. For whatever it's worth, I'm a really big fan of symmetricality. I think that the universe would like ideally to be as symmetrical as possible. Especially when you see things like planetary orbits. And if you ever see like a binary star system, that very symmetrical, the movement, and then it ultimately runs out of energy and explodes into some sort of horrific cataclysm. But I do find in my experience, think of the way the waves crash on the beach, the way plants grow. I think that Mother Nature would ideally like to move in a very symmetrical fashion. So my default always is the symmetrical A, B, C, D. So that would be there we are, A, B, C, D. So just to, if you're relatively new to all this technical analysis stuff, it looks something like that. And the more symmetrical this looks, the better. I don't know whether this has a background or not. Let's see what happens. No, it's just a line. Oh, well, you get the idea. So boom, 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 boom. I think that's what's going on. There's that 4.669. Interesting study here is right off of that level. So, whether it be symmetrical EBCDs, whether it be fog and bombs, whether it be reload zones, whether it be original double bottoms, and what I often, you've probably heard me say this too before, right? Try to find at least 3 unrelated reasons to justify taking a trade. And really, I kind of like the idea that we start off with 3 unrelated reasons that are all location reasons. And then we'll move on to, all right, then we'll throw in indicator confirmation once we're at location. And then we'll throw in price structure, and you got yourself a trade idea. So I think you could make the argument 1, 2, 3, 4, maybe even 5. Look left. Institutional fingerprints, especially this one here. That one looks juicy right in there. I can make a pretty good argument that we need to come down into this 62, 63 area. Seems logical to me. Anyway, we'll see how it goes. And of course, this stuff never moves in a straight line, but that's ultimately what I'm thinking. I would say that in the near term, we have a pretty big celestial event happening here. And then, of course, interesting. I thought, yeah, isn't that weird how I have that there? I think I ran into this before. I tried to type this on here and it wouldn't type. Well, let's see. Maybe we'll just delete this. I seem to remember deja vu trying to do this on Friday. Anyway, Wednesday. So right in the middle of all of this, and I don't think this is an accident whatsoever. Actually, we should call it the real name. FUMC. I suppose this is the reason why there's no viewers of my. Gotta say, I mean, I gotta pat myself on the back. Was there anybody in the interneting? Anybody? I mean, somebody say something. Was there anybody saying that we were gonna hit like a massive cycle pivot? And if you get your shit together there a couple of years ago, and what's even more bizarre about this video is I even made reference. I said, we'll probably be up at 100, 200,000 bucks at the end of this. And don't look back in hindsight. There we go. This darn thing is 100, 200, and you're like, oh, I missed another cycle. Well, I don't remember anybody a year or two ago saying these kind of things. I don't know. Call me crazy. Many people do. Anyway, I don't know who else in the public talks about things like celestial events and stuff either. I don't know anybody who does, but maybe they do. I guess what I'm thinking now is we've got this funny celestial window. And of course, through these eclipse windows, kind of the humans go a little bit nutso. As well too, Cole actually even shared it, Colstradamus. And it's one of Mr. Buffett's favorite tools is the decennial study. Unfortunately, with what orange toupees, actually more like, I don't know, gray, white, orange, weird hair color toupee. Um, Making this particular year a little bit more exciting than what normally happens. But this is from Timing Solutions, I think, is the website. Fantastic tool. This is one of our OGs on the site, Cole, who's really big on astrological event, and he also happens to like that decennial study. This happens to be for Bitcoin. Um, I'm not exactly sure if this is the Bitcoin chart or not, though. I think this is just the general stock market expectations. And you can see this is that eclipse window that we're going through right now. And you can see we certainly did dump right into that event. And unfortunately, this isn't really the friendliest of market cycles. Coming out the other side, though, we should enter a fairly friendly market state once we get into sort of April, May. And it does feel as though maybe a little bit of the bearishness has been front loaded into this study. But I do think it is interesting that based on the DC annual, this is what typically would happen in years that end in five. That yeah, we start off the year kind of pulling back into some sort of troughing event. Then we have a nice little rally coming out of that. Interesting, in the stock market, we may not actually be able to go to new highs in the summer. I don't know. The January barometer suggests otherwise. This I think is the current year. And you can see we started out on a weak note. Then we had a pretty powerful move up halfway through the year. And then, unfortunately, into the end of the year, geez, the wheels kind of fall off the bus. So this is going to be one hell of a tumultuous year, folks. There's no doubt about that. I suppose along those same lines, um, looking at this stock market, I didn't really do a January barometer of Bitcoin. That might be an interesting study to do. But here's the January barometer study for the stock market. So, there's the beginning of the year. The initial pullback, then a pretty substantial rally about halfway through the year. This is the first week. Then a bit of a pause, and then sort of end the first week on a bit of a sanguine note. Yeah, I guess right in there's the end of the first week. So almost like the end result of this whole thing will just be a big hurry up and do nothing. So if we project that now over the full month, initial up, then pull back. So that's this initial up, then pull back, then pretty big rally. So that's what this is here, but expressed through the sort of the middle 2 quarters of the year, probably the second and third quarter. Then something falls off the bus here come the fall. And we actually have to go through a period of, if we're lucky and this study plays out the way that it is, we have a big thumping. And then we have sort of a sideways to up, and they try and finish the market, finish the year on a relatively up note. We will be higher year over year, so it should be an up year. But you can clearly see, I mean, we're going to go through some sort of crazy ass bull, and then something happens here heading into that September, October event. And ironically enough, I would not be surprised if crypto, and more importantly, probably like, can you say legacy crypto? Does that work? I don't know. Pushes us up, Bitcoin rallies into its cycle peak. I'm fearful of what orange toupees are doing, and especially as kids, man, they're horrible timers. I'm fearful of what kind of over the top shill they're going to be involved in. It's going to be some crazy ass fucking orgy. And I have a sad feeling that, as soon as they're like, oh, we're all going to get rich, you better get in buy Bitcoin, it crashes. I don't know. This doesn't fill me with a lot of enthusiasm heading into the fall here. Something ugly is going to happen. So I don't know. Be aware. I guess that's about all I can say. Did find it interesting that I think that there is a trade to be done. The question is, how hard do you want to go in on this trade? But for the newsletter here, yesterday I was doing some digging. I'm very interested in playing, although I don't know whether you can see this or not. Might be hard to see. I think this was just a trading view link. Yeah. I do like the idea of playing this IBIT, basically ETF, playing this into some sort of crazy ass blow off top here this fall. I don't know whether a bull call spread is the best way to go. If Bitcoin does hit, I mean, let's call a spade a spade. I've told you this repeatedly. If Bitcoin does trade up to 250,000, I'm selling my Bitcoins, going to buy and Liam in a house, and I'm probably just going to. I actually have a cute little property down in southern Illinois that I'm really interested in buying. Maybe setting up like a little mini farm or something like that. Um, and just sort of maybe I don't know. I mean, I do love trading the futures contracts, and that's a lot of fun. And I love doing my weekly commodity trend survey. So I would imagine I'll probably continue doing that. Might even do some private coaching. But anyway, we'll cross that bridge when we come to it. Point is if this scenario does play out where, it is a 4-year cycle and we do get our blow off top here, I'd like to make as much money as possible into this cycle peak. And I'm very, very interested in playing this IBIT through a bull call spread. This spread in particular will be looking for this IBIT to trade up into the $100 area, which really isn't a big, surprise. That's just basically a big fat round number. A lot of ETFs like to run after these big fat round numbers. I would actually make an argument that this cycle peak push here was to the 50,000 mark. The fact that they topped it out just above that level, I would say the 50,000 was the big fat round number target. And if this thing does consolidate and then start to head higher, I think the $100 target, I don't think it's unrealistic. Call me crazy, but many do. Also, too, I do like the sine wave nature of this asset, the way that it moves, and of course, lining up with our September, October peak, and then also lining up too with our May trough. I really do like this feeling right in here. So I am going to be watching this particular bull call spread very closely. And what the good part about these spreads is that all we need is a rally back up to test this downtrend line up around 50, $60 or so on the ETF. If we can sneak in down here, the net cumulative delta on this spread actually suggests that we probably should see a double somewhere up in this area. So I'm going to be watching for a trade to develop here. But as you can see, I mean, there's good old, this is actually a little bit after the fact, but this is basically around my birthday. And that's, all the original market chatter that I have about when to expect bottoms in Bitcoin. This particular study that I just did and produced, interesting too, how it also seems to align nicely with that sort of April, May window. If this was just purely symmetrical, you can see how that dump comes in sort of middle of April there. Probably a better sort of look is that weekly chart that I like to follow on old corn. Where's that? Over here. Yeah. So if this correction is like last year's correction, you notice from the first sort of panic dump to the next key low, It was basically 9 weeks. So from that kilo, big tech dead cat bounce to the next kilo, 9 weeks. So if we figure that this was the big kilo, and I'm thinking it is, but maybe this is it. I don't know. But 9 bars, well, that takes us to 28th of April. That would be sort of like right in here. Then the ultimate lowest low is this yellow one, which is 14 bars from this initial dump low. So 14 bars from there takes us to June 2nd. And then what I thought was interesting was that if we actually measure from the actual breakout event, when the actual market breaks to new all-time highs, and measure backwards to the actual ultimate low, that's one of these arrows. Isn't that weird? Huh? It's on here somewhere, but anyway, we'll just duplicate it. Clone. Oh, that's not it. Getting the actual study. That one there. Let's try that. There we go. If we go to that sort of the lowest low kind of idea based off of this original bottom, so there, lowest low, then drag that forward, that paints us a breakout right about here. So interesting how that's heading into the fall eclipse. And I want to do this. I guess, well, actually, if we go off of the ultimate bullish reversal, like when did we actually break to new highs? That's 34 bars from that original bottom. So this is 34 bars right there, although you can't see it. And then here somewhere it should say 34 bars. Label. Oh, yeah, there it is there. It's underneath the birthday cake. What does that say? 24 bars? Is that 24 or 34? I guess 24. Anyway, so we draw that back from there. 24 bars. Puts a bottoming date there. If we basically do the same thing we did last year, that puts a bottoming date somewhere. I guess I was thinking somewhere around my birthday there. Well, these numbers look a little bit off. I guess actually that makes sense because there was the actual bullish reversal, the actual double bottom coming in. So I think you're going to get your breakout buy signal here, but we don't break to new highs, which I guess would be way over here until August. So ultimate low should come in somewhere around our birthdays. Chris, myself, and Liz. Of course, it's all Liz's fault why this market sells off into our birthdays, right? And I like the idea that we work our way higher and break out eventually by the middle of the summer. And then I think I've shown you this before. What was quite surprising to me when I looked back on this in hindsight is, and I've said this, so I mean, it probably sounds like a broken record, but you'll notice there is the cycle peak. And I think we're going through this kind of period right now where you see lots of 50% retracements, 50% retracement of that entire range, 50% retracement of that range, 50% of retracement of that range. Then also too, look at the dates. March. Does this feel like maybe history is repeating itself? So the point is that from this period here, let's say we're even right in this area right now, roughly. Actually, that's what this is, right? To the end of this cycle, that's 43 bars. Let's say, let's be generous. Maybe we're a little bit further along. 41 bars. Well, we clone that. And then let's go back to today. And also, too, that cycle peak was slightly beyond this. So we'll use that number. That's fine. Does that kind of line up with where we are now? Whoops. Guess that's what this was, right? So in a weird sort of way, we're actually kind of right on schedule. It's kind of freaky, eh? And the worst part about this is just, I mean, think about this in real terms. The price of Bitcoin here going through this mess was $1,000. I mean, just think about that in real terms. It topped out at $20,000 and it's banging around here around $1,000. That's 20x over that 40-week period. And then, I had even pointed out that in the last, like, I don't know, 5 or 6 weeks of the cycle, the darn thing, in through here, that's only, that's a weekly price chart. So that's 2 months prior to that peak. The darn price of Bitcoin was 5,000 and change, 55, 56, 5,700, whatever. And it topped out at 20. Geez, that's 4x just in the last 2 months of the bull's life. And that's even following the actual peak, right? The actual peak was there. That's only 6 weeks. And actually, hell, you could probably even say, yeah, the lowest low is there. That's only, you get the idea. It's only like 5 weeks. Which one is it? That one? Yeah, there we go. 5 weeks. What's that low? That low is 5,500, and that's 19,666. Interesting number. And keep an eye on that kind of number when this cycle peak. I guarantee you it will be one of these mystical numbers that, of course, all the public goes, ooh, Satan's driving the bus, all that. It's not Satan, it's the Freemasons. All right, according to Monty Burns, Freemasons rule the country. I'm not surprised that price is kind of as dormant as it is right now, considering what I expect to happen here in basically about 6-8 months of time. This stupid thing could actually go like 20x from these levels. And how ironic, we go back to my fun little write-up of the IBIT. And what did I say the expectation on that trade was? I mean, this is remarkable how cliche all this crap is, right? This is not a 10x trade. Actually, this is old. I thought that I did this. Actually, this is 10x on the half that you actually sell at double. So that's why. But this is basically a 20x move here. Looking for the options to go from 50 cents to a maximum profit of $10. That's 20x. I don't know. Call me crazy. Many people do. It's just my sort of musings here. What do I think the end of this cycle is going to look like? So I don't think we're there yet, and this is going to take some time. I still think, Brian's birthday, all that kind of talk. I don't, based on this sine wave, you can see how long it took this sine wave to eventually end up bottoming out and starting to turn back up. I don't see any reason why this won't look like this. You can see there's the sine wave turn. So that is, basically Liz's birthday right in there. I suppose if there's, this is, I don't think that we actually head down here in price. I think that we're probably going to bottom out against, probably play with this trend line, lose it a little bit. And then, oh, guys, the end of the world. Oh, no, recapture it. Oh, lose it. Oh, recapture it. And then eventually you can see the bot levels here. I do like the idea that ultimately the market probably bottoms something along these lines through this window. Recaptures the bot level. Obviously, these numbers aren't exact, and it'll be something along these lines. Move stop to scratch will be nothing more than just a rally into fill in this gap from the original sort of breakdown level. And my hunch is that the option spread itself should double in that window. It ultimately W out here, then crank up into the move stop to scratch, move stop to trailing level against the old high. There should be a bit of traffic. And then if this thing is for real, then I think, in my personal opinion, I think it's a no-brainer that we come up and we tag this trend line. The question here is, do we actually have that stupid, insane blow off top, absolute orgy peak into this cycle peak? I mean, I don't think anybody should really bet on that happening. That should almost be like Well, let's plan for the trade. We're going to trade this as a bot. We'll look to maybe, because it's a spread, if we pop up into here, sell half of the position at double your purchase price, get yourself into a risk-free trade. And then, into the cycle peak, if we actually top out here, the spread's probably a good, 50% return or something on the rest of the money. If, however, we do have that blow off top and we run up to like the better part of $100, well, then the damn spread turns into a home run. And I do think that, obviously these numbers aren't exact. I don't know exactly where the bottom is going to come in here. But I do think when we stab up into 1.618, that kind of conversation, I think that's probably the end of your move. If we're really lucky and it's some sort of insane blow off top, we rally up and tag this trend line to the upside. But I think that's kind of wishful thinking, frankly. I think that's a bit beyond expectations. I would say on balance, if we targeted this like $80-$90 window here on Bitcoin for its cycle rally peak, I think that would be an absolute home run trade. And you can kind of see 1.618 is basically where the top here. That's sort of what I would be thinking. Same thing. So that's my expectation. I am going to be hunting and taking this trade setup as it comes in. And I also want to trade a number of the crypto stocks as well. So keep your eyes peeled in the coming offerings, newsletters and stuff like that, write-ups on miners. And I don't think I'm not interested in touching that MSTR, too volatile, too suspect to just one person's whims. And I don't think it actually is a good proxy for options and option spread trades. I could be mistaken, but that's my hunch. Something like these ETFs are absolutely perfect for these spreads because the price isn't too crazy volatile. And of course, there's tons of people in these markets because there are obviously a lot of people very interested in the Bitcoin ETF proxies these days. Did find it interesting that Kathy Woods is moving all of her ETFs over to the Chicago Board Options Exchange for listing. I'm not quite sure what's happened to the US capital markets, but man, they sure have gone screwy. Where an options exchange actually has a lot of these crypto indexes and stuff, and now ETFs listed there. Very bizarre. Anyway, wouldn't have never seen that in years gone by, but oh well. So anyway, nothing to do here now. Just watching. The spread itself is sitting at about 80-90 cents. I think I'd actually like to try and focus about 50 cents. So I don't think there's anything to be done now. I would actually like to see price come off a bit more here into Liz's birthday. And then I'll probably be thinking about doing a trade. So in a weird sort of way right now in crypto, it just feels like a hurry up and wait. I'm not in a big hurry to do anything. If anything, I was a little bit disappointed that this market moves so far so fast. And then, of course, you had all the stupidity about Trump and how he's kind of bastardized this whole space. And I also I started off the broadcast with what was Doge originally and what is it now. So I'm not actually overly impressed with crypto too much anymore. I would be really surprised, to be honest with you, if I'm even that much interested in crypto following this cycle. I'm everything that I teach in the education program at TRI, and I think what I'm probably going to do is write a book about all of this. Suggested actually the crypto story in its purest form and its hedge form. I actually think the story finished there around 2020. And now it's just degenerated into like a bulletin board, pink sheet, pump and dump. Let's see if we can get you to con you into actually going to Trump University for an accredited degree. Yeah, right. Arr, arr, arr. That would be the same thing as investing in a millennia meme coin for your pursuit of excellence. What the hell does that buy you in the world? Not much. So, which kind of sucks, right? Because we're like, hey, crypto, man, crypto, yeah, it's next best thing since sliced bread. I don't mean to be rude, but still kind of waiting for when we're actually going to use this thing to actually do stuff in the world. I know good old Stewart, TRICTO, he's an unwavering advocate. And kind of sucks to see the way that things like the some of his stories that on balance, like if you actually wrote out the story like of Luna, I mean, on balance, the story should work. It's just these stupid humans get in the way, mess it all up. So anyway, gonna ride this into the cycle peak. I don't think it makes sense to hop and abandon ship now. Everything says that the cycle should come to an end this fall, this winter. And it's also kind of a function, too, of the U.S. Short-term interest rate policies, being the hegemony and all that. So try and understand that it's not so much that this is even a crypto story that I'm thinking that this cycle comes to an end here, spring, winter, summer, and then of course following summer we have to go into the fall, and this will probably be pretty ugly, folks. Don't kid yourself. I think this actually has more to do with this money cycle than anything else. So I actually think that, if you look around the globe, the world economy, and perfect example as you look at my messed up country, what an absolute disaster. Like literally, I think that they just pulled off a coup d'etat in my country. And they've got this doofus bankster crook who's basically just a puppet of the Rothschilds, um, who is not guys never had a democratically elected appointed position in government. Everything has just been he just kisses the appropriate asses and stuff, and his whole life has been along those lines, and very well mannered, and the poster child for sort of modern day banking, whatever the hell that looks like. And just mysteriously out of nowhere, boom, he is now your new dear leader. And actually, when I was tweeting out all these comments, because frankly speaking, I don't think anybody in these Western societies, if we really are a democratic society, I don't think that what is happening now should be happening. It's only happening because, frankly speaking, these governments are bankrupt. They have no choice. And when you get to the point where they are bankrupt and you have no choice, you have to follow exactly what the banksters say you have to do, or they'll just turn the credit off and your country's toast. And it'll dissolve into civil war very, very quickly. So I don't think that they want civil war here. I think that the 1%, the oligarchs, all that kind of fun stuff, they want to maintain power. So they're basically just, okay, banksters, whatever you want, that's what you get. And we'll monkey around this democratic system, quote unquote, but we'll make sure that your man's there. And I guess what I'm really, really fearful of here, and I suppose it would be totally appropriate, is that mysteriously some sort of crisis develops here where this whole democratic process is simply put on pause, and we now have officially a dear leader, and who knows when the hell, if we ever even have elections again. Just kind of scary times we're living in, that's for darn sure. Anyway, so the point of the whole Bitcoin rally cycle, rally peak, I think has more to do with short-term interest rates and the cost of money here, and this cycle should come to some sort of peak. 2026-ish, somewhere in that area. And of course, the absolute best sort of visualization of this, a gentleman who lived a couple hundred years ago. I love the fact that when you Google Benner cycle, Josh's blog post comes up here as like the number one hit. That is just absolutely awesome. I tell you, that's a perfect analogy of 1 + 1 = 3. I would have never thought that that kind of outcome would happen. But anyway, Mr. Benner here lived a couple hundred years ago and just based purely on these 20-year cycles roughly. Can you equate them with the Jupiter Saturn orbit crosses and conjuncts? I guess that's the same word. Oppositions and conjuncts. Also, too, I think that there's demographic cycles that are in force here, but in essence, this has been a pretty consistent roadmap of what we should be expecting with regard to asset cycles. And you also see, too, here 2026 is a minor cycle peak. So if anything, well, that's good. We should, I don't think, this is, I think, the number one reason why I wouldn't be bearish of Bitcoin here in basically early 2025 is you're not this isn't the part where the market cycle peaks. We should be thinking the end of 2025 sometime through 2026, believe it or not. And then I think that as generations go, this is the big shift in our entire society. I mean, it's absolutely remarkable to hear the stories coming out of China, how basically that entire Fakazi is literally evaporating right in front of our eyes. And, there's talk now that Xi's completely lost control of the military. There's, like populations absolutely collapsing. They're like literally cities and towns that are like disappearing. You can't write better fiction than reality. I would not be surprised if we actually find that the end of this decade is all about the implosion of all of this, everything bubble nonsense in our society. And I think the everything bubble nonsense in our society was based on the stupidity of the Chinese economic dream build out bubble, world's largest real estate bubble on history. It all just completely unwinding. And also too, which is kind of scary because a good capitalist not going to let a good opportunity slip through their fingers. The American banking system is setting itself up for trouble again. And, it'd be interesting to see how Mr. Trump deals with this. But if I understand correctly, Mr. Biden has let a lot of mortgages fall into delinquency. I think they're called FHA loans, if I'm not mistaken. I might have that acronym wrong. But it turns out that very much like the 2008 financial crisis through here, a lot of loans were basically guaranteed by the U.S. government. And what's happened was Mr. Biden basically gave a free pass where a lot of people who had these loans just simply weren't making payments on the loans. They just didn't make any payments at all. And Mr. Biden just sort of said, okay, well, we'll just accrue the interest and we'll just add the money. They're not making a single payment on it. I mean, talk about free. A little bit suspicious how it can be that corrupt. But, especially with Trump and this whole Allen Doge thing, do they stumble upon this and go, oh, gee whiz, I think we better foreclose on all these people that aren't making their mortgage payments. And it turns out it's an absolute cascade because the problem is rampant. I mean, Biden just let anybody who didn't want to make payments on their mortgages, he just gave them a free pass. Oh boy, here's trouble. So and then of course the underlying market state, I think the US economy is relatively okay. Um, I wouldn't be surprised though if into the end of the decade, if we see things like China and stuff roll over. Um, I wouldn't actually be surprised if this coming cycle you actually see Japan and Germany actually emerge as I could actually potentially see Germany become the new hegemony. Why? Because of one image and one image only. And I show this to people on the site every day. So there is the current hegemony running debt to GDP 122. And then there's Germany sitting at 62%. And Germany just officially passed, well, and it's really cheeky the way they did it. The incoming government used the previous outgoing legislature to try and jam through this massive government spending authority that the Germans can now go and blow up their budgets very much like these Western nations. I suppose we can't make the argument for Japan. Japan's still going to be sitting there doing absolutely nothing. And yeah, of course, there's China to creeping up there into problem land. Interesting how France and Italy in that European bloc really aren't any better. But interesting how Germany's floating out here on its own with such a low debt to GDP. And actually fascinating. Look how Mexico. You would think that based on this number, that Mexico could go and float some more debt to go and firm up the border there and hire some border guards, and make Donnie happy. Anyway, so bit of a rhetoric, I suppose, but interesting. China's not terrible there with debt to GDP. But based on this 122%, and of course they were able to bring this back down a little bit with the you know prior to the CARES Act and all that kind of stuff. They were getting this number under control, but since Biden's presidency and the hyperinflation, they blew it all up again. But they say you get to about 100, 125% debt to GDP, and the wheels start falling off the bus. So anyway, interesting how Germany there, and that I am hearing a lot of people, sort of that Peter Zahn guys on about this. Seen a few other commentators that I like to listen to that. This is quite a number, right? This something very significant is happening there in Germany, waking the European giant, maybe. Anyway, I suppose that we'll cross that bridge when we come to it. But you might even find that in the post 2020s, 2030s world, Europe might have a little bit more of a punching power than what it is now. And especially, often I find that at the very end of moves, economies sort of just fall right off a cliff and go into like free fall. And I get the impression that a lot of industry left Germany because of this silly thing that Russia did. I'm not sure how this plays out. That's fascinating how Russia's debt to GDP is as low as it is, eh? That's a bit surprising. I mean, technically, nobody, I guess, will lend Russia any money. Maybe that's why it's so low. But you would think that Russia could go and borrow a whole bunch of money to rebuild its economy and even rebuild Ukraine's economy while they're at it. Anyway, macro tastes great. Anyway, interesting to hear a lot of rumblings about what's going on in Germany. This won't be something that we'll see today or tomorrow. But, 10, 15 years from now, I would not be surprised. First off, a little bit of a reckoning here through this delicate period in the market here, this 2032. This is going to be a pretty tough window here. And then coming out of this and heading into this cycle apex, ironically enough, if you guys want to be millionaires and billionaires and all that kind of stuff, we should be focusing on what does your life look like? What does your business look like into this peak, which is still a good like 10 years away from us? Because that's the big cycle apex that you guys should all be thinking about here next. This one here, this year, and the end of this year, beginning of next year, I think this is a minor cycle. It's not a major one. Unfortunately, though, I do think that this 32 is it's a pretty significant cycle low. Boo, hiss, hiss, boo. But I suppose if you're long a whole bunch of purchasing assets and we go through some sort of crazy ass meltdown here, I don't know whether I usually like if anything, what I think probably happened is that everybody's going to be expecting another 1929 style crash. And so as a result, I don't think that that's how that plays out. I don't think that this is going to be a crash. What I do think, however, though, is that we go through another massive hyperinflationary wave, which keeps asset prices elevated. But at the same time, too, your loaf of bread's like $50 and all that kind of stuff. That's what I think that's the scenario that's more likely to play out here. And then if we look at things like the long-term demographic cycles, which we haven't really looked at too much here recently, but if we suppose this might be an interesting one to look at. Yeah, so I think that we're sort of like right here, right now, kind of idea. Great reset. Klaus screwing us up the butt. Believe it or not, I think we head into some sort of crazy ass orgy peak into 35. But I think that something like the 26 through 30 window. Actually, I could see it be something along these kind of lines or something along these lines. Actually, it's better to look at it if we look at it just from the regular, uh, not the take the money printing out of it. Yeah. So this was done up the end of 2024. So we're moving along here. But I think that this coming correction window that 26 through 32, I think it looks like this. So actually, you know what? I think we even have that, or I have that chart. So let's just see whether I can show you that in real time. I think this is it. Let's see. Am I lucky? Lucky, lucky, lucky. No, this is a different one. Anyway, this is our my fun little futures account. Oh, I don't want to log into this right now. No, we do that later. All right. So actually, you can even see we're just breaking out of the net. Actually, yeah, no, it's very, very similar. I think we're right in here. And actually, that makes perfect sense, right? Because look at that. So April, September. Yeah. So you can see June 1945 is the actual breakout. Here we're like October, November, well, January, February 25. There's a breakout. So we're pretty close to that. So I do think, your 26, 27, 28, 29, 30 is nothing more than just the market. Like I said, I don't think we crash, but I think we have to go through a consolidation period to set up the base for that push into like that, the next 10-year decade. And that's going to be a big push higher. Anyway, that's not what I wanted to show you though. I wanted to show you of course not there. Fear, greed. There, this is it. Yeah, here we are. This is the one I wanted to show you. So I love this because what I did was the purple. It might be hard to see. That was the baby boomers. Maybe I'll change this to a color you can see. Maybe red. Can you see that? Is that a little bit better? There we go. There we are. So if this cycle was like the baby boomers, then I think we would have done this. Oh, we're an hour in now, eh? Oh, geez, I gotta get going soon. But notice, and then the yellow line is the post Great Depression world. Basically, this is the baby boomers, that purple. I suppose I should change that to red. This is the yellow, the people who fought the Second World War, came back from the Second World War. I think they called it the greatest generation. So if we overlay that, notice the price action is very, very similar. So remember we had said that halfway through the January barometer, we're supposed to actually have a pretty big rally here halfway through this year. I think that that's what's going to happen here. And of course, expecting Bitcoin to go up to a couple hundred grand. So anyway, I think that this is basically what the latter part of the 2025 looks like. And then we have to go through a window of a couple of years. That's a good couple of years where, we're chopping, we might even find, this is that end of 2025, beginning of 2026 kind of chop fest that the January barometer is saying. I have a sneaky suspicion, I don't know, somebody write this down. I think Mr. Trump's going to be assassinated. Coming out the other side, I think that this is our chop all the way into this cycle peak 10 years from now. I think that's basically what our bull market's going to look like over the next 10 years. So that's what I'm planning for. Anyway, hopefully that was edutainment for you. Did see that somebody had asked a question. Happy early Paddy's Day. Oh, is it already St. Patrick's Day? Jesus. 2 days from now, 14 years ago, the end of my life happened. Good old Guinness in a Beamish glass. That's kind of sacrilegious. But Beamish ale actually used to be the second most popular beer in Ireland, and you could literally stand a fork up in it. I think it was bought out by Anheuser-Busch or something like that. Might have been even Guinness. Anyway, Alexa's giving us a shout out for early St. Patty's Day. That's kind of cool. Did you see that somebody said that huge short bets are being placed on Bitcoin right now? I think I had pointed out, maybe we'll get out of this conversation. You can see what I'm thinking down the road. I think I've told you I'm also looking for a little bit lower here. I actually think, and what I wrote, I put a tweet out here over the weekend. I heard that there's some big bet, and who knows who the hell it was. Could be anybody. Shorting Bitcoin here at 82, 83, 84,000, something like that. I actually think the short level there is 87,000 and change. And it does have a double top breakdown working. So it's not the cleanest of bot setups, but it is there. I think it's perfectly legit. And of course, I made a pretty good case for why I think we see the market go down to 60, 70,000. So I did see people posting, oh my God, did you see some big whale shorting Bitcoin? Well, I don't really like the trade location. I think they probably could have timed it a little bit better, but I'm perfectly fine with that kind of thinking here. And I don't think that this is really that outlandish. As I've said here repeatedly, lots of examples of 50% retracements through the last cycle. There was 3 of them all between the halvening event and them pushing up here into the end of the cycle. So seeing a 50% retracement here, nothing out of the question whatsoever. The only point that I would just make with regard to that short setup that person was talking about there, and sort of poor timing on that, is ironically enough, from the bot's perspective, if we actually rally back up to that original entry level, then actually this thing should be stopped out. You should hop off at scratch. So if we do, because there is the move stop to scratch level, that's 79,000. If we do rally up into back to this 87,000 level, that would be move your stop to scratch and just hop off. So again, going short here, and then with Brian thinking that the bot setup says that I have to get out of the short if we rally up a little bit more, that gives that person a very small window for this trade to actually still be working fine. I mean, it is what it is. It's their money. They can do any old damn thing they want with it. And that's what makes a horse race. Just people stepping up and putting their money where their mouth is. In the near term, because we already had the actual no-brainer trade off of the top. And I actually even put a tweet out to this. We were debating as to what we should include in the newsletter today. And I didn't know whether this was a good one to actually put in the newsletter. But frankly speaking, I think that the short trade is actually kind of getting over. I mean, this is so textbook. It's everything that I'm trying to teach all of you. Trade location. The bought target technically is actually a harmonic short trade location. PRZ stands for potential reversal zone. So you heard me barking about symmetrical AB equals CDs earlier and harmonics and the way the market wants to move in a very symmetrical fashion. Well, the fact that the market actually failed at this trade location level means that actually the market's acting incredibly symmetrically. Very happy, go lucky. It's not really unhappy. So we had trade location. You can see this fun little tool that one site member created a few years ago. Works absolutely awesome, especially if you don't want to clutter up your chart with a whole bunch of indicators. Confirmed RSI bear div, money flow, VI, I can't remember what that is. Willie, good old Willie being stupid, Chaikin money flow. So a whole bunch of volume studies along with price studies. So we definitely had indicator confirmation up top here. And then, of course, do we have price structure? M's, 3-bar fractals. That little 3-bar empire there I thought was absolutely the perfect short trade location. And we dump down into 50% rules, have realistic profit objectives. This is everything I'm trying to teach you. But coming in and shorting now, I actually think that right now, technically, we're trapped in this triangle where I could very easily see this market rally right back up to this sort of 87,000 level. No problem at all. Like 87, 88, 89,000, beg your pardon. Oh. That, 38.2, we should expect 38.2 bounces at any given point in time in markets. And then, of course, trend lines acting as support, then acting as resistance. I think that this trend line here, along with that 38.2, is a major brick wall, but that is resistance, not here. So whoever strapped on that short there, you're also shorting into a call-in pump chaser zone. I don't know whether you really want to short heading into one of these zones. That's really bad trade location, right? If I really was hunting a short, I think I'd want to try and hunt this downtrend line and the 61.8 to 78.6 reload zone up there around 100 grand. We'll see how she acts here at 89,000, we'll call it. I could very easily see that the market catches a dead cat bounce bid into this level through the actual FOMC event. And then we spent a lot of time on the site on Friday. I don't know whether Julian looked at it or not on Thursday, but also too on Wednesday, talking about options expiry and how I thought, especially with the S&P 500, there is a lot of incentive for them to rally this market up, because not only do we have FOMC here on Tuesday, Wednesday, but we also have the big quarterly options expiry on Friday, the 21st, which is, I think, the real reason why this market is moving up. They'll blame it on the Fed, and they'll say, well, the market caught a bid because people were kind of hoping the Fed was going to lower rates. I don't think the Fed's going to lower rates. And then the market will gyrate here through Friday. And then mysteriously, you find that the damn market collapses following that options expiry. And we just ride this downtrend line back down. And then, of course, into our fun little capitulation bottom lows, 4.669s and all that kind of fun talk into Liz's birthday there in early May. So that's short there at 84, 85. I don't think it's the best trade location. I think they could have done a lot better here. I mean, we'll see what happens. You can see in the short term a bit of price volatility here. I suppose this is a daily price chart. This is the Bitcoin index, so things are all over the place on this. Also too, probably good idea for us to keep an eye on Ethereum. It's kind of humming and hawing about whether this thing would put in a double bottom and break out. It was rejected off of that level on that big whoa, somebody really shorted the shit out of Bitcoin news. This is an interesting one because it didn't actually break out, but now I would definitely say this thing can reverse and turn back up. Anyways, you might see a pretty substantial rally here. Keep in mind, we have to put in a W above this line way up here for that to actually turn back into a bull market. All this is just dead cat bounce territory. There's a lot of room for this thing to move up here. So put the two together, there is the downtrend line on Bitcoin quite a bit higher. And there is the downtrend line on Ethereum quite a bit higher. And then we have this crazy eclipse window. You can see the double bottom that tried to come in on Bitcoin. I think this is actually fired, and there is the FOMC event Tuesday, Wednesday. We'll have our fun little site videos here. Through that event. That's always a fun sort of thing to comment through. So be sure to hunt for that if you are a longtime viewer of the channel. Maybe hit the subscribe button and the bell and stuff so you can be notified when that video loads up. That's always a fun session. I guess we'll do that on Wednesday around the FOMC announcement. But and also too, the stock market itself, especially with the S&P 500, I'm seeing a lot of reasons to look for this thing to rally here. So, and if anything, if I was, hunting trade location, I love that level right up there, 92,000. So I don't know whether Mr. Shorting a shitload of Bitcoin down here. I don't know where their liquidation level is here, but I don't really like that as a short trade location. I think they're kind of asking for trouble. And as I said there a few minutes ago, if you were actually taking this Bitcoin short that I laid out, if we do get a rally up here and the market firms up here at all, I think I actually have to get out of these shorts. And as I said there, the short right now is basically just sitting at scratch. If the market does come back, I can't find the damn chart while I'm talking away here. It's not on any of these. Where the hell did I put it? Anyway. Okay, so there was just one question, I think, in the AMA document today. Where is that? Come on. There we go. All right. So this is the image I wanted to show you. I think it should be short from 87 and change. Since we already had moved stop to scratch, if this thing bounces back up into that level, if I was short off of this, I would just walk away. So anyway, that's my 2 cents with regard to new trade ideas right now. I don't like a new short here at all. I would say if you are short, great. You are short and you have your stop at scratch right now. So we talked about Bitcoin. We talked about what I'm thinking about going into the fall. Really do like the idea of hunting this long, but it's probably about a month or so away. Stock market selling off and actually getting to the point where we're probably going to have that really powerful bottom come in over this next month or so. The breadth indicator itself is setting this trade up. Did notice that our breadth indicator for the crypto index has gotten a little bit choppy here, but I noticed when I was looking at the actual index itself, it had about, I think it had like 27, 28 names, and like 4 or 5 of them were Ethereum proxies. So I wonder whether maybe this index has been a little bit too concentrated on Bitcoin or on Ethereum. So I actually asked Jord to cull that out. You need this to be as diversified as possible. If it's too many of the same names or too few numbers actually in the index, then you get this really choppy reporting. What we want to see is this nice fluid reporting like you're seeing on the S&P 500. So take this with a little bit of a grain of salt here right now. What I would say, of course, as always, is if we do get both fast and slow reporting below 20, that sets up your absolute no-brainer buy setup. I think that the slow is 30, 40. It looks like, we're going through that dead cat bounce. If anything, this is a reason why not to be strapping on new shorts here. That's not a short setup. If anything, with W's and us crossing, that's a little bit bullish. I think in the short term, we got very washed out there. And thank heavens, I haven't heard Trump barking about crypto or his kids barking about crypto too much this weekend. Although I did hear some reference that he bought AVAX or something like that in his fund. But I also heard a reference that his fund is getting absolutely destroyed. It's like underwater by like $100 million. So it just goes to show, Trump's the last guy in the world you want to take market timing advice from. Or his kids, for that matter. But nonetheless, interesting to see how this is actually perking up a little bit. And I do like the idea that I actually like the idea of the market rallying into the Fed window and into this options expiry on the 21st. Call me crazy, but that's what I'm expecting. Okay, so the final question or the final comment that we'll make, and I got to get out of here, was a comment regarding somebody had asked, I think in the AMA document, and I'll just see if I can just read it here and then speak to this. I haven't done too much research into this, but if I understand correctly, somebody asked about this site called Trueflation. Okay, AMA document, boosh. Let's see what we have here. All the way down. Are we there? There we go. Oh, a couple questions. All right. Bridge Forth asked. Okay. Yep. Okay. Nope. Okay. Number one here. This is what Jay Powell said on March 7th. If the economy remains strong, but inflation does not continue to move substantially towards 2%, we can maintain policy restraint for longer. Okay. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Sounds logical. Question. Given the above, and according to trueflation.com, the U.S. economy has met its goal, currently showing inflation below 1.75% today, although it is ranging because yesterday it was below 1.5. So how much weight would you give this? All right, so we pulled up the site. And we also pulled up the Twitter feed and got sort of a nice mouthful of the whole marketing angle of this. I think it's going to obviously have to take the test of time to really vet out whether this new index that they have here of inflation, Trueflation U.S. Inflation Index, year-on-year change updated daily 1.68%. I don't know. I ask anybody who lives in California about the price of eggs these days. And does this take that price change into account? Chris, are you still here? I'd be curious what the price of a dozen eggs in New Jersey is these days.
It's interesting because they were, from what I understand, like on average about like eight and change for, a dozen. But there are certain brands that are at least like $2 or $3 cheaper, and I have not come to understand why that is yet. But
All
they're
right.
they're still expensive all around.
Right. So, some of these indexes actually even specifically say we exclude the volatile food and energy component of inflation. So I haven't really looked into this enough to see what actually goes into making up their statistical body here. Um, I guess, just on balance, looking at this kind of image, I think that this does to a certain degree make sense where Mr. Trump was elected. We had kind of like a euphoric market state. And keep in mind, stock prices are the ultimate inflation index. They are the ultimate leading indicator for an economy. And if stock prices are rising, that is inflationary. If stock prices are falling, that is deflationary. So you could make the argument that just based purely on stock market valuations, this chart looks a heck of a lot like that. I think though that the Fed specifically, they like to follow this thing called the core rate. And they also are a really big fan of the personal consumption expenditure indexes. Um, and those numbers have been very, very sticky, especially the core rates. They're begrudgingly not wanting to come down. And frankly speaking, I did have an interesting, I think it was the last week's Broiler Chickens, an interesting study on goods inflation. I other than things like eggs, which I think are kind of an anomaly because of certain state regulatory policies. I'm not quite sure if it's federal or if it's just specifically statewide. But I know, for instance, in California, they culled just a ton of chickens, and it didn't really have anything to do with bird flu or anything like that. It had something completely different. I don't know the story about the eggs exactly. All I do know is I do find it interesting down in the States how egg prices have just absolutely exploded higher. And yet here in China, actually, the egg prices are relatively stable. So I'm not quite sure if that's a specific to the United States issue right now. Um, but with regard to things like what the Fed is thinking, I would be more inclined to follow things like the core rate. Um, and let's see if I can find this here. Too many tabs, of course, as always. So like if we're scrolling through, also too, I would say, what are consumers' expectations? And consumers' expectations for inflation are not going down, they're ticking up. So I'm not quite sure how that would fit into that trueflation's measure. Um, but I can definitely tell consumers are not happy at all. And their expectations for prices going forward are higher, not lower. I guess what I'm thinking here is maybe we can find this a little bit quicker here if we uh I mean, the problem here, of course, is that we're going to be looking at government produced data. Of course, let's go previous month. Retail sales. Where is the core? There we are. Core PCE price index. Notice how this thing's awfully sticky here. These are the numbers that the Fed really likes to follow. So, you might find that Trueflation study rolls over. As long as this sitting at 0.3% year over year or month over month, that's, what, 3.6% annually. So they really want this number down below 0.2 on a regular basis. And of course, when it was running up at that 0.6, that's like what, 7% annual inflation. So I think the Fed really needs to see this trending lower. Right now, it almost looks to me like this is the bottom end of the range, and that's like 0.1. This is the top end of the range, 0.6. We almost got this to break. If this actually did show signs of actually topping out and breaking through this 0.1 in earnest, then I think you're probably going to have the Fed say, all right, yeah, we've gotten in front of this inflation problem. The issue that I saw recently with regard to data, though, was that the housing market and the shelter component of this whole inflation problem is not going down at all. And prices are not falling anywhere. Yes, maybe they're not going up as much as in under Biden's sort of CARES Act 2023 runaway prices kind of stuff. I think they've gotten in front of that, but I don't think that they've actually gotten the anecdotal evidence that yes, this thing has actually broken. Right now, to me, that looks very much like a sideways market. This Trueflation site, when I look at this on first glance, what I see is I see the stock market. So if we look at say like the S&P 500 and that daily chart, that's what that looks like. Okay, it looks very similar. The only problem with this is it's up and down like a horse drawer. You could easily, this is just straight down. So we can find easily that this jumps right back up there. So does this image look a heck of a lot like this image? I do think so. So I'd be curious about that. This also too is, it's moving all over the place here. This is just from last spring to last fall to the end of the year to March. That's a pretty big range, going from like 3.25 down to 1.5, back up to 3.25, back down to 1.5 kind of idea. That's jumping all over the place. And I have a funny feeling it's actually more tied to the stock market than anything else. I'd also say too, this is a bit concerning. What letter of the alphabet do we see right there? So I doubt that I've never heard any Fed speaker or any talk about this Trueflation site. I suppose if we heard Jerry say something like, hey, you know what? I'm really enamored with this Trueflation site. Well, then we all better start paying attention to it. I might argue that just based on what I'm seeing here, how do we say this? I have made the argument that a lot of people are worried that these tariffs are actually going to be inflationary, when I actually think, and probably the 10-year bond's probably the better one for us to look at, I think that Mr. Trump desperately needs this. This is the price of the 10-year bond. He definitely needs this to move up here. Mr. Hugh Hendry has made, months, maybe even a year or so ago, made it publicly known that, his macro view is that this market needs to move up dramatically, and he's heavily long bonds. So I get the impression from the 10-year bond that they're still in sort of like wait and see mode. I don't know whether they're totally convinced that this is a new bull market and we're off to the races here. I don't see higher highs and higher lows, right? looks like they tried to put in higher highs and higher lows. So there was a pretty powerful message that was sent there back last summer. And then, ironically enough, heading into the election and the whole euphoria of Mr. Trump being elected, ironically enough, that actually broke that bottom pattern. So I think that for the time being, we're in a trading range. And I would argue that that's probably what a realistic expectation with regard to inflation is. And until we actually do start seeing successively higher highs and higher lows, I don't think that the Fedsters are really in a big hurry to do anything here. And then, if we want to actually see what the Fed policy is, usually it used to mirror more the euro dollar market, but they got rid of that. So now the best proxy we have is probably like 2-year government bonds. And I also don't see a trend higher here either. What I see is a wedge. So this is building to some sort of crescendo, no doubt about it. But I don't have any idea which way this is going to go. And if, what are we supposed to think if we see the market smiling at us? I mean, we do have a top, a bottom, and a breakdown through that low. So you could make the argument that the wedge is broken to the downside, which is higher short-term interest rates, not lower short-term interest rates. I don't see higher rates. What I do see, though, is basically just a range-bound market. And this is another reason why I don't think, if that truflation number was correct, I think you would see this 2-year bond. This is the market talking, not some Fed governor, not some, some guy shilling a website or something. This is the market, just pure supply and demand for bonds. This to me looks like a range bound market. That does not look like it's trending higher or lower. It looks like it's very confused as to what the direction is going forward. And I'd have to agree with that. This is another reason why I don't think the Fed's going to do anything here right now, is I think they're just waiting. And then the final thing that I would add to this, and this is just my own personal bent, is do we have any tools that we use to help us see inflation and deflation in the marketplace? And this, in my opinion, is the absolute best tool to use, because this is the inflation protected bonds versus the non-inflation protected bonds. If this number is rising, then it means that people are willing to pay a premium for the tips, which have an inflation protection component. And if that inflation protection, if the inflation is perceived to be growing and rising, well, then that inflation payout will be growing and rising. And so people will be willing to pay up for that tip protection versus the TLT, which does not have that inflation protection. So let's not overthink this. Just what letters of the alphabet do we see here? And this is just nothing more than just pure good old supply and demand. And as far as I can see here, I see obviously this is what started out this whole conversation back around the Jupiter Saturn cross. And of course, stupid shop teachers with fake boobs poisoning our children's minds. This was the end of that absolute insanity, end of the Jupiter Saturn cross 40-year interest rate cycle. And since then, it's just been nothing more than just successive higher highs and higher lows. Higher highs, we potentially got to a point where, hey, maybe things are looking, oh, fuck you. Sorry, I swore, but that's all this is a big F you. Another higher high and higher lows. So, no, I do not see that truflation's collapse in inflation here. What I do see, though, is I do see that the rate of change is actually getting smaller. Hopefully you can see that. So if we were looking at this from a momentum perspective, like a MACD histogram or something like that, we'd have a huge high here, then we'd have a lower high here, and then a lower high here, and then an even lower high here. And of course, we all know that as momentum divergence. So the rate of change of this inflation is slowing. That's always a good thing, but that doesn't mean inflation's going away. And unfortunately, this thing could just take off like a rocket here at any time it wants because it continues to make higher highs and higher lows. So maybe this true inflation here is projecting that, yeah, the inflation rate is falling. And maybe it is suggesting a massive double top. The rate of change of inflation is falling. We're still in inflationary times, don't get me wrong. And I guess what I'm seeing is the inflation rate itself is slowing. So I think that's sort of like, that it's growing only at 1.6%. Oh, we're so lucky versus it growing at like 6, 7, 8% when it was doing this shit. Does that mean that this is great, happy go lucky? I don't know. What it does, in my opinion, it does leave the Fed the ability to cut rates, which actually might get this thing to actually start coming back into trend size. You can see how big these moves were. This move here, that's laughable in comparison. So that's your rate of change. It is decelerating. I won't argue that. But at the same time, too, we're not in a deflationary situation. We're just in the Feds, they'll call it a disinflationary environment. And in that kind of disinflationary environment, can they justify cutting rates if they see that, this stock market sell off is getting a little bit out of control? Yeah, I could see that. It wouldn't shock me. Keep in mind that, my country, interest rates have fallen in half. And of course, this is what's really scary about all of this. And probably the best thing to finish this off with is you tell me. Has the M2 money supply situation around the world, has this gotten under control? Where is, I know I had a whole bunch of them, and I'm not quite sure which one it is here. So many. Where is, well, we'll take a stab. Oh yeah, this is all of them. So you tell me, has this money printing situation gotten under control yet? Maybe the rate of change of these has slowed down a little bit in the near term. Maybe that's your true inflation. That's only a 1.6% increase. But are these things actually trending down? The answer clearly is no. And I hate to say it, but this is where it gets really dangerous. As you can see, if the US money supply growth starts breaking up through these highs, oh boy, all hell's going to break loose. You can see the euro, it already has cleared through those highs. These commodity countries, which are absolute jokes of nations. And frankly speaking, Canada is basically bankrupt. So, ironically enough, they're joking about the 51st state and all that kind of stuff. I mean, if Canada's creditors actually came calling, they could foreclose on the country. The country could absolutely collapse into absolute disaster. So, and the sad thing is, of course, Australia, same sort of boat, commodity current country. They're a little bit more fiscally austere, but that stupid Trudeau idiot completely destroyed our country. So, US situation is not as bad as these commodity and European nations. And really, I might even argue that, we need to, when this breaks out to new all-time highs, then we know that we're right back in the shit. The economic situation is really bad again. And they've turned the money printers back on. And of course, we should expect another big wave of inflation, which of course we are expecting come like 2027, 2028. So I don't know. I hope that that helps a little bit with this question. I mean, it's an interesting data set. Yeah, it does look like the inflation rate is coming down. The rate of change is calming down, but I certainly don't see any deflation. And if anything, I just tertiarily saw the video, and the guy's like, "Well, the CPI follows us by like 6 months. So if our data is saying that this is falling, then you absolutely know that the CPI is going to fall." Okay, fine. And if that is the case, then that does give the Fed some wiggle room. And as I've said repeatedly, I mean, you look at China, that's an absolute disaster over there. You look at Europe, there certainly ain't any major economic growth out of Europe right now. You look at the commodity countries, Australia, Canada, Russia. Russia. Is that even worth having a conversation about? What a disaster that is. So does it make sense that if Trump here is like, you know what, we're going to lay off a whole bunch of government workers, we're going to downsize the US economy, we're going to downsize the US government, everything is going to shrink, we're not going to be spending money like drunken sailors on military crap for Eastern Europe? Yeah, I would expect that to be disinflationary. So yeah, I don't see anything that would have me argue this. The question here is, do we actually get at some point where the whole damn thing tips over, and then the Fed has to come out and desperately lower interest rates in a big hurry, which will come on some sort of great crisis. And as I said, what I'm really worried about is, like somebody was telling me in Romania, they've basically suspended democracy. Some despots basically been put in power there. Germany, the whole democratic process is completely unwound there. My country, what a joke. There's clearly no democracy or any kind of freedom in Russia or China or anything like that. You can sort of feel that this whole democratic society kind of movement is unwinding here, which is really scary. So I don't know. We'll see. Could be some interesting times ahead for us. That's for darn sure. Oh, look at that. It's 1 o'clock. Only supposed to talk an hour. All right. So we'll save this question for tomorrow. And I hope you all enjoyed that fun edutainment. I really do have to hit the road because I don't want to be late for Liam. So, all right. I think we're going to leave it at that. With regard to speculating in the market, yeah, I mean, kind of just cool your jets mode. And if anything, like I said, to start off the broadcast, I've got to move here at the end of the month, so I'm kind of preoccupied with other stuff right now. I'm not really too concerned about the crypto market. I'm not really too concerned about the broader stock market. I think if anything, we're going through a bit of a cleanup period, and I wouldn't even be surprised that Mr. Trump is trying to force the Fed's hands. I think the Fed at this coming meeting will say, sorry, we don't have enough data to justify cutting rates. I think the stock market will roll over. It will make new lows. It'll be a great panic and a real crisis. And I wouldn't even be surprised if we hear announcements of bankruptcies, might even be in my country. These banks are teetering on the edge here. Might be Mexico, might be Europe, might be Asia. I mean, it could come from any different direction. And then at that point, once the crisis has hit, then I think the Fed will come in and will start sort of, propping up the market. But I don't think that comes until, like, I think this is my birthday here. And I think this ultimate bottom comes in like through the late spring, early summer. And then we're going to have a pretty rip roaring summer into the early fall. All right. I think I'll leave it at that. Hope you got some value out of that. PMA for the win. Didn't really talk too much with you guys over there on YouTube. My apologies. I guess just when I get going, full of hot air, man, it's awfully tough to slow me down. Anyway, hope you got some good value out of all that. Leave a comment, maybe a note as to if there was something that I said that perked your interest, and I'll be more than happy to respond back. Slow and steady wins race. PMA for the win. Only thing left to say to you fine people is wish me luck on the road today with my boy. Try to be a good citizen and not get in any fist fights on the roads. All the best. Oh, and bye for now.